Moving on, we have the next session, which is going to be a panel discussion on yellow peas. It's going to be a packed panel, lots of information. And to take this panel forward, I'd like to request Convener East, IPJ, and of course, the Managing Director of SRCO EXIM. Ladies and gentlemen, please welcome Mr. Anurag Tulchan.
Good afternoon, ladies and gentlemen. This is one session which I believe everyone is looking forward to. And I have a very, very distinguished list of panelists with me, whom I would like to call one by one. The first on my list is Mr. Chad Popovich. Chad is a trading manager of Global Pulses Division at Glencore Agriculture in Rotterdam. Chad has been with Glencore since 2013 and previously held roles with Viterra Asia and Canada, stationed in Singapore and Regina, Canada, respectively. Chad has been involved within the pulses industry since 2008. Mr. Chad Popovich. Hi, Chad. The next on my list is Mr. Jonathon Driedger, who is a senior market analyst with FarmLink Marketing Solutions, Canada, where he has worked for the past 10 years. FarmLink Marketing Solutions works with over 1,000 farms in Western Canada, providing market analysis, sales recommendations, and cash brokerage services, as well as commercial research. Prior to joining FarmLink, he worked as an economist for the Winnipeg Commodity Exchange and as a commodity risk management consultant with a major US-based futures brokerage firm. John attended the University of Manitoba, where he obtained a BSc in agribusiness and an MSc in agricultural economics. Welcome, Jonathon. My next panelist is Mr. Nadeem Sandli, who is currently the trader for pulses in Sodru-Gestvo, one of the largest Russian agri companies, focused on origination in the Black Sea region. The headquarters are in Luxembourg, Europe. Owning the biggest soybeans crushing plant of Europe, that is 8,000 metric tons per day, owning Kaliningrad port in Baltics with an operational capacity of 20 million tons annually, and owning 5 river terminals in Paraguay, being the number one in the next 2 to 3 years. Welcome, Nadeem. And the last but not the least, my panelist from India, Mr. Rakesh Khemkar, who is the director of UMA Exports Limited, which is in the grains, sugar, and pulses business since 1988, and also into the exports, imports of rice, pulses, sugar, spices, and they have a couple of processing units of spices and pulses in India, and they are also a government-recognized 3-star export house. Welcome, Rakesh. So, before handing over the mic to each of these gentlemen, I would just like to give you a brief synopsis of the importance of yellow peas with regard to the Indian pulses scenario. Of the total imports of pulses which India does every year, yellow peas constitutes more than 50% of the imports. For the year August of 2016 until July 2017, India imported a figure of in excess of 3 million tons of yellow peas from varied origins like Canada, Russia, Ukraine, the Baltics, EU, some from Australia as well. And for the period August 2017 until now, we have almost imported 1.65 million tons already. With a few changes in the government policy from the 8th of November 2017, wherein the government brought in import duties at the rate of 50%, there have been some changes, the volumes have dropped, and these are challenging times for all the importers and the stakeholders. So without wasting much more time, I would first of all like to invite Jonathon to give us a brief idea about the Canadian markets, as Canada is the largest single supplier to us for yellow peas. Thanks.
Well, thank you for that introduction, and I guess just provide a little bit of a brief overview, from the Canadian perspective, and from the supply perspective primarily, and perhaps in the context of maybe what the Canadian farmer is thinking here within the current season, and more importantly, as we're getting closer to making spring planting decisions. So there's 3 primary themes, and I'll elaborate on these in the next handful of slides just to provide a little bit more detail. But current supplies are large for yellow peas in Canada, and they will be at the end of the current growing season. We are going to have a large carryout. The lower price environment is going to reduce seeded area, although perhaps not as dramatically as one might think if one looked at yellow pea prices in isolation. One of the major concerns that we do have coming into this next season is dryness in Western Canada, and obviously there's a lot of uncertainty about potential yield impacts. So this is our forecast for yellow pea ending stocks at the end of the current growing season, and so just to put a little bit of perspective, very recently Statistics Canada came out with their December 31st stocks report, and it did show a record large yellow pea supply, although only marginally above last year. As you can see, our forecast for ending stocks is significantly above last year, and the big impact on that is obviously the reduced export demand. So last year we had much larger forecasts for exports compared to what this year will be. That all goes to the carryout, and so from a supply perspective, again, it's the reduced demand more so than the large supply that is resulting in the large carryout coming into the current growing season. And that naturally is reflected in prices to farmers, which are down substantially from last year. You know, movement has been a challenge. You know, buying interest naturally as exports have been reduced significantly is lower, and Canadian farmers, essentially the market's sending a supply signal to plant fewer peas next year, and the Canadian farmer is hearing that loud and clear. However, as we look ahead to our expectations for seeded area next year, and this includes both yellow and green peas, but as you can see with the bars, we essentially expect that green pea seeded area will be relatively flat, maybe up a little bit. Our expectation for yellow pea acres next year is going to be down about 12 or 13%, maybe as much as 15% going into next year. Again, based just on the price environment alone, one might suspect that we would get a larger drop in seeded area, but there's a few different aspects in play that might reduce that. First of all, when we look at from a Canadian farmer's perspective, what are the planting alternatives? And really, you know, aside from canola and a few other smaller crops, some of the other larger crops, for example, wheat and so forth, that might also be considered, don't look particularly exceptional from a profitability perspective. So even though pea prices are lower, they're not necessarily from a potential return perspective that much further behind some other cropping alternatives that farmers are considering. There's agronomic benefits as well, and just keeping honest to good rotation. And so we may not get it. We don't expect that we're going to see as large a drop as one might think. Once again, just looking at the price difference from one year to the next, but certainly a drop we do expect to see. So this is a graph of pea production, and again, you know, roughly as one might expect, we might see a similar drop in production as we have for seeded area. Although if we look, for example, compared to 2 years ago, we had enormous yields in Western Canada 2 years ago, and so the actual decline in production, if we look back, for example, 2 years, is perhaps over 1 million tons, and so kind of as we think about this from a production perspective. So our forecast, normally when we go into a growing season, we kind of think about a trend line yield when we, before the crop is planted, who knows what weather is going to be, and so we sort of think about average or trend line yields. And so from a production perspective, there's maybe a little more uncertainty going into this growing season than there often is, and obviously weather always is a significant uncertainty. But just to give a little bit of context, this graph here is what they call a drought monitor, and essentially it reflects how dry conditions are. And so in this graph, you can see that really that area that's in the circle constitutes the primary pulse growing region in Canada, and it's also an area where there's a severe shortage of moisture as we go into the growing season. And so last year we had a very, very dry year, but one of the things that helped carry the crop through is that there was a lot of subsoil moisture, so even though there was a lack of rain, actually yields for crops were surprisingly good considering the lack of rainfall. However, those soil reserves have now been depleted. There's also a real lack of snow cover through most of Western Canada, and so we're going into the growing season with very, very dry conditions. The forecast as well is not looking particularly promising. Now, weather is uncertain, a few good rains, and of course suddenly conditions can look more attractive and better, but at least at this stage of the game, the farmers in Western Canada are very cautious about the dry situation. And so there's a couple implications for this. And so in terms of seeded area, this might actually help hold pea seeded area up from what it might otherwise be, and part of the reason is, for example, a crop like canola, which looks much more attractive from a return perspective. It's also an expensive crop to grow, and there are some farmers that might view a lot of production risk if the conditions are very, very dry, and as a result, we might see some pea acres come back into production that otherwise might have been bounced out by canola because of the dry conditions. And we've accounted for that in our forecast, but it's one of the dynamics that's in play. I think another thing a little bit within the uncertainty in terms of the pea-seeded area is because for a number of different crops, the returns for farmers are not exceptionally high. And so there is the ability, I think, if, for example, as we head into the spring seeding season, a competing crop suddenly started to increase in prices, farmers might switch more acres out of peas, for example, and especially as we've heard a number of times today, the price outlook for peas is not particularly promising, certainly in the next few months as we think about the window when Canadian farmers are making their final seeding decisions. So it's a little bit fluid, I think, going into this spring, perhaps more so than some other years because of the price environment, because of the dryness and some of that uncertainty. And then finally, of course, the uncertainty around yields. And as I mentioned in our production estimate, we've assumed maybe a slightly below average yield, and that is one that has the potential to vary considerably. And again, as I mentioned, certainly a few good rain showers, and everyone forgets about how everybody talked about how dry it was. At the same time, the fact that it has been so dry and that dryness has been persistent, if we don't get some moisture, we could potentially see a much larger drop in Canadian production of yellow peas due to a combination both of the lower seeded area, which we expect, and perhaps even a lower yield than we've already forecast. And so as we look forward to Canadian production, those are some of the things that we are watching very closely this year, and the range of potential outcomes might be wider this year for Canadian yellow peas than it might be in some other years for some of the factors that I've mentioned. So that's just a summary of what we anticipate going in the Canadian growing season for yellow peas.
Thanks, Jonathan. I would now like to have views from Chad because he runs a very big global book spanning all origins, be it the European Union, the Baltics, Black Sea, Canada, as well as some quantities from Australia. What is your opinion, Chad, about the yellow pea scenario in this coming year?
Hello. Yep. Good afternoon. I guess my overall view is we are in a difficult environment when it comes to peas. I guess first off, looking at the current year, production levels were very good. In a normal year, I would say that Canada production and Canadian pulses in general would more so drive the market from a supply standpoint. This past year was a little bit different as we seen very good crops out of the Black Sea, primarily out of Russia and Ukraine, which essentially brought more supply online, and that was directed towards India versus a lot of the Canadian pulses still sitting on farm, like Jonathan mentioned. Overall production quality being excellent. We are in a current oversupply situation from an S&D standpoint. In saying that, prices overall are lower. That we've seen decreases on the price over the past few months, which is resulting in less selling from farmers, especially out of Canada. We seem to have tested the lows from a price perspective in and around that 250 to 260 CNF India. It seems as though, below those values, we see very little engagement from the farmer or the supply side. That's not saying that it turns the scenario bullish, but I think what it does do is it shows the level of support today and going forward in the future. At current values, and this is where I maybe disagree with Jonathan a little bit from his presentation, but I think we're going to see less acreage globally, a little bit more of a decrease versus the 15% that he mentioned, or 13 to 15%. I think overall, we, in my opinion, will see 20 to 25% decrease in acreage. And the reason behind that is A, a bigger carryout, and B, I think just the uncertainty within the environment, and that environment being India and the hurdles and controls behind exports and imports. So that is my opinion from a global standpoint.
lately we have seen even the Baltics emerge as big suppliers, but this year, that is in 2017, their crops were definitely smaller because of some untimely rains. Do you see the Baltics seeding as much yellow peas this year, or do you think their acreages also will go down and they would rather shift to fava beans?
Yeah, I think the Baltic countries will also be down. They're one of the regions that are carrying a bigger percentage of the carryout. Canada obviously is the largest, and I think, I mean, from an export standpoint, there has been very good exports out of both Russia and Ukraine, but with the exception of carryout in Canada, the second largest would be out of the Baltic countries, and I do see a reduction there, in my opinion, of approximately 25%.
Thank you. Nadeem, I would like your feedback. This year, Russia and Ukraine have produced a record crop, and we have seen massive shipments from both these origins into India and the other countries. We would like to know what exactly was the crop size in Russia and Ukraine, and till date, how much would have been exported, and what would be the stocks left, and your price indications and ideas for the coming few months.
Sure. Hello. The total production in Russia, as we counted, should be around 1.7 million tons. And there's a huge domestic consumption in Russia, both on food and feed basis. So the exportable quantity is like maybe 900,000 tons in the beginning of the season. And Ukraine, it was the record year, and 1.1 million tons was the production. And so far, they exported more than half of it. And there's not much domestic consumption in Ukraine when you compare with Russia. So the remaining quantities for exports in both countries would be maximum 450,000 tons, I would say.
Each?
No, total.
Total.
Each, we can say 200 each, 225 each, like that.
So that's not a very big quantity, considering that the new crop will not come before July.
Yes, the earliest harvest will start by July, early July.
And would you also see the acreages going down in light of the Indian duties and less demand coming forward?
Most definitely. It's not because only of the prices, though. When we first kick off the season, the prices were already low when you compare with the last few years. But there was a good flow of supplies and shipments still. The reason of the acreage going down will be because of the, like Chet said, uncertainty of the environment. Now, India is no matter what Pakistan or Bangladesh buys, India is the sole leader of these yellow peas imports. And now, like traders, most of the farmers are losing the confidence in the market. And I would say easy 30% decrease on the acreage will be happening.
So do you see the prices going down from these levels further, or do you think this is the bottom and there's no space for the markets to go down?
I don't think that it will go further down. There was some stressed cargoes. That's why we saw these 260s, 250s. But it is not adding up when you convert it to the CPT levels or FOB levels. So I don't see much room down.
Rakesh, I would like to have your ideas about the Indian market, where you see the demand coming in, at what levels, and to what extent the people here would again start buying in quantities.
I think this current levels India will buy. Basically, it all depends upon the government policy. There are rumors that India may increase the duty. If government increase duty, that will be a problem. Then India, I think, won't buy for a certain time. But right now, India will buy at these levels, and Indian market is bound to increase, and it will come at a parity with international market. And India may import another 0.5 to 0.75 million tons till July.
Because I've been told that the total inventory of yellow peas pan-India is around 750,000 tons, which is roughly 3 months of consumption. And now that we are in the middle of Feb, basically March, April, May, until end of May, all these stocks will be liquidated. So we definitely will be needing peas, as peas have become very popular over the last few years. The consumption has been increasing, the trade levels have gone up. So do you think at these prices, if there is no further intervention as regards the increase on duties are concerned, are you optimistic that big quantities will come in, Rakesh?
Not big quantities. I think at these levels, India may import 1.8 million tons to 2.1 million tons annually. So as per you, India already imported 1.65 million tons this year till now. So another maybe 0.3 million tons may come. So till July, till June. So I think yes, we may buy 0.3 million tons at these levels.
Another factor, Chad, I would like to seek your inputs is on the freight market, which also plays a very prominent role. With the freight markets seen going up the past few days, where do you see the freights ruling in the next few months?
First off, I'll mention I'm not a freight trader, so I don't know the in and outs of the freight market, but yes, freight has increased. I would say that especially going into this season and particularly into the monsoon season within the next couple months, freight is definitely not going to get any cheaper. The risk of charterers, the risk of suppliers, demurrage risk, everything else, I mean, there is a premium for that business. Long term, again, not being in the freight market on a day-to-day basis, I can't really give an opinion of how things look for the foreseeable future, but I can say that the paper market and how it's traded, there definitely is a carry in the market. Again, India's a tough market when it comes to freight because all it takes is one bad experience, i.e. a vessel sitting for 30 days during the monsoon period, which will result in some owners not wanting to do that particular voyage or that particular routing. So I think the freight market overall will stay relatively firm. Again, does that change how the market reacts, or does that, is it truly the function of price today? No, I don't think so. I think the true function of price today is ultimately dictated by India and the policies on the import side.
Another thing I wanted your reaction was with regard to the exchange rates with the euro strengthening vis-a-vis the US dollar. I was hearing from a couple of my friends in the EU that French peas, Baltic and German peas will be difficult this year because in terms of euro realization, the farmers would not be getting adequate values. What do you feel on that?
Volatility within FX has been, I guess, the story of the past few months. Especially now we have very strong euro and Canadian dollar for that matter as well. It's weakened a little bit over the past couple weeks, but that is, I guess, part of the reason why I think the carryout is also going to be high, and the farmers are willing to carry it because the returns aren't good. So we say this today, unfortunately, with the volatility within the forex. It can change tomorrow or next week. Yeah, it's definitely a factor. I think more of a factor these days, just with the extreme volatility within all currencies.
Jonathan, you have, through your slide, shown us that the seeding intentions for peas this year also remains in excess of 3 million tons, right? So given that what Rakesh has said, that India would probably buy 0.3 to 0.5 million tons more during this year, that is until July, do you still think that the Canadian farmers would be sticking to these numbers, or there could be a downward revision going forward once they are ready for the seeding, sometime in March, April?
Yeah, I think in some ways it may almost be as much a function of weather here going forward. And the reason part of I say that is because if we stay exceptionally dry, that just by nature might help draw some or help maintain some pea acres. It's a cheaper crop to plant for Canadian farmers, and so it might be perceived as being less risky compared to, for example, something like canola, which might look more attractive from a return perspective, but if it's extremely dry, farmers might not want to take on the production risk. So I think that's maybe one part of it. The other part of it as well is we have seen some increase in, for example, in oilseed markets, and so there's some regions where we grow peas that have also started to expand soybean production in recent years. And so as we've seen soybean prices increase, that too might squeeze into squeeze out some potential pea acres. And so to Chad's point earlier about us being up touch on the high side, his lower drop in seeded area I think is plausible if we get some moisture, and certainly if we see oilseed prices stay relatively high, that certainly could eat into some pea acres. Our current forecast is based on some drier conditions, which would help support pea acres. But as I mentioned, it could be more volatile from farmers' current expectations than it might be in some other years, just based on some of these factors at play. So it's less certain, I think, today than it might be in some previous years at this time of year, because we are getting closer to when farmers are actually getting in the field.
Apart from India, if India really withdraws, which other destinations would you be really looking forward to? China, I know, is a big receiver of Canadian peas, but other than India and China, which other countries are you really hoping to develop or increase your volumes to?
Yeah, those are certainly the two largest ones. Bangladesh has been an important customer as well in the past, but really traditionally the volumes drop off significantly after those three destinations, and so from a farmer's perspective, we might see some marginal volumes increase to some other locations, but really I don't know that there's any locations where we're going to see a huge increase in volume in the shorter term. We are seeing, and as we've seen in some of the presentations earlier today, an increase in domestic consumption. We are seeing, for example, pea processing plants getting built in Western Canada, and so, for example, for vegetable protein consumption. But those are, and I think the demand outlook is very encouraging, very promising, but those plants are only in the process of getting built. That's not a short-term solution. Those are longer-term sources of demand, good elastic demand, but not going to help the market in the shorter term. So that's, I think, certainly one of the challenges and where we see the larger carryout. And as been mentioned a few times, I think the uncertainty as well, even more so than just the carryout, is the uncertainty that has farmers struggling a little bit with how to plan going forward.
Rakesh, I want your feedback on the prices, the local prices which are ruling in India. Where do you see them going forward in the next few weeks, and at what levels do you think India will emerge as a buyer for Canadian peas as well as Black Sea peas?
Today, the markets are around 28 in the eastern coast, and on the western coast, it's around 25.50 rupees per kg. I think in near future, in March, we may see a level of around 29 rupees per kilo in the eastern coast, and on the western coast also, I see nothing below 28 rupees. And basically, I see that, yes, India may start again importing at the levels of around $265 CNF without methyl bromide. And Canadian peas, we will be comfortable importing around $280. So which is very near. I heard someone quoting us around $290. So we see that, yes, if they are down by $10, we may start importing small quantities.
So Nadeem, do you think prices from Black Sea can be achieved around 265, what Rakesh is saying? Would you be interested at these levels, and would the Russian and Ukrainian shippers be willing to work at these levels?
265 for small lots happened, and since there is not much exportable quantity left, I don't think that many sellers will go down those levels. Also in Russia, the ruble is getting strong as well, so it's not supporting.
What sort of levels do you think would entice the shippers to sell?
It should be above 275 without methyl bromide for some sellers to consider. But for big lots, I mean, yeah, for 20 containers, you can achieve those levels most probably, but for a handy-sized vessel, it's not going to be possible, I believe, to procure at least that quantity.
Where do you see, Chad? Do you think these prices are achievable? What Rakesh states, around 265 for Black Sea and around 275, 80 levels for Canadian peas?
From a Black Sea perspective, like I said earlier, I think 250 to 260. The market has been tested at those levels. Maybe you can buy bits and pieces here and there, but I think any sizable volume, I don't think it's possible, honestly. Add $10, $15 to the price. I think you will get a little bit more, but really the majority of the carryout is in Canada. That's, I think, where the sizable volume comes from. You could also argue a little bit from the Baltics as well. I think from a Canadian standpoint, the important thing to look at is storage capability. The Canadian farmer has the ability to store approximately 100 million tons of grains on farm. The average crop size in Western Canada, this is all crops, oilseeds, grains, pulses, is around 75 million metric tons. So in theory, he can store an entire year's crop plus some carryover every single year. Money is very cheap globally. He's invested a lot of money in storage on farm, and at a price he's definitely willing to carry it. From a Canadian perspective, I would call the market somewhere in the 250 to 255 FOB range, give or take. with freight and fumigation equates to somewhere around 295 landed India. I think that there's not a lot of downside in that price, just on the principle that, I guess it's also a function of Forex, but with current foreign exchange and dollars per bushel to the farmer, I think at that level, he would be a seller. If you drop the price by $10, I think he's going to hold it and carry it into new crop.
So you do not think that the Canadian farmer will become desperate and he will sell?
I don't, no. And as Jonathan mentioned, it is, I guess we're entering a weather market. Everyone's talking about how dry it is in Canada. The farmer can actually see that. It will depend on the spring rains, on what actually materializes there. But in the current scenario, I don't think that he's going to be a panic seller. Just an earlier point too, where we're seeing demand, and I think what's kept Canadian prices firm for the majority of the year is the North American pet food demand. In a normal year, we don't really see that demand because the U.S. Origination usually caters to that, but because of the lower prices in Canada this year, our exports to the U.S. increased by approximately 100,000 tons, which doesn't seem like that much, but it is keeping a steady flow, and it is reducing, that carryout to a certain degree. And with that, I think that's kept prices relatively stable. And you have to remember, it was only 2 years ago that we were paying $10 a bushel for yellow peas in Canada, where today that price is around $7. So personally, I feel that the Canadian farmer, financially can hold the peas and has the storage capability to do it, and is going to do it at a certain price. And I think that price is below $7. He holds above $7 or at $7. I think he does continue to sell some.
Nadeem, I would like to know from you, like Chad just mentioned that in Canada, Western Canada, the farmers have the capability to store 100 million tons of grains. What about the storage facilities available to the Black Sea farmers in Russia and Ukraine? Do they also have access to such grain silos or on-site or on-farm storage?
No, they don't have such storage capacity in Black Sea because majority of the storage are for grains, and still pulses quite new product for them. And that's why we don't see exports from the major ports, especially from Russia. But in Russia, they have the option to use that product as feed, like they are doing right now, because of the soybean meal prices going up. Now feed peas or yellow peas are working out in terms of the ratio and the feed complex. So instead of selling at those cheap levels, Russian traders or Russian farmers will consider selling it in the feed market within Russia, or some feed exports to the Europe market.
So what should be the basic difference between feed peas and food peas, which would induce the farmers to sell at a premium as food grade? Or at what levels, if it goes below those levels, the farmer would or the trader would rather think of selling it as feed peas?
It depends on the soybean meal prices as well, but below 265, I don't think that anyone will consider even exporting it from now on.
So basically, they don't have the space to keep the cargo on the farms, you said.
At the farms they have, but at the ports they don't have.
Okay, I got it. I would like to invite questions from the audience. If anyone would like to ask any one of our panelists any questions with regard to what has been discussed here. Any questions?
Just a comment. The duties on yellow peas is 50% now, and that's the maximum India can impose according to WTO bound rates. So they cannot go beyond 50%. Just a comment.
Thank you. So Rakesh, I don't think that the government will impose more than 50%.
Exactly. They may put quantity restrictions like they have put on tour and all that. And that means if basically the thing is government don't want much of yellow peas coming into India. That's why they've imposed 50% duty. And basically yellow peas is one of the cheap pulse which is being sold into India. And government to support other pulses like tuar, urad, they don't want much yellow peas coming into India. They want to restrict the quantity. So if like the international market goes down, and government may impose quantity restrictions,
Any other questions from the audience, please?
this year chickpea production is forecast to be higher in India, and prices due to Bhavantar scheme or other reasons are forecast to be dropped to very low levels. What do you think would be the demand substitution for yellow peas and chickpeas? Or at what price the demand would be substituted?
Rakesh, please.
See, I don't know. I think like what level chickpeas goes down, it's very tough to say anything right now because it is yet to be, crop is yet to be harvested. But as people are predicting that the chickpeas may go down to 32, 33 rupees per kilo, if that happens, I think chickpeas will replace yellow peas majorly. In besan and all that, it will replace majorly. Besan, dal and all that, it will replace majorly.
So, price-wise, do you think that yellow peas at some time would surpass chickpeas?
Maybe, maybe. It may surpass because I think at this levels and the duty structure, less of importers will be importing it into India, and there may be demand-supply gap, and at some point it may surpass chickpeas.
But that will happen if the chickpea values really go down to 32,
Yes.
33. As Rakesh rightly said, it is still premature and it would just be a wild guess because we still have to see what the crop comes out. And even as per the Bhavantar scheme, which you were just mentioning, the government of Madhya Pradesh has also given a time of 4 months for the farmers. They have told them that they need not panic and sell everything on day one. They can store it for 4 months. The government will be looking after them. So I really don't think that there'll be a panic selling from the farm side for chickpeas. So I'm still optimistic the markets for chickpeas should remain at these levels, and we are more or less seeing the bottom. This is what I would feel personally.
A question for India, I guess. In the past, we've seen government buying schemes for yellow peas, public distribution system and whatnot. If we see, I guess, values supportive, and if we continue to see hurdles for imports, do you see the government taking over as the main importer of yellow peas for India?
I don't think so. This government is last year the pulses prices were very high in India, so that's why they imported some quantities. But I don't think so. It depends on the government policy. But I don't think so. Personally, I don't think so that government will get into imports and trading because as itself, it's government is against the subsidy or anything they are giving. So I don't think so. Government will be importing.
You see, Chad, as long as we have adequate crops here, we do not have any paucity or scarcity of any crops, and we have a bumper crop of chickpeas, which is projected at in excess of 9 million tons. So, and if the values still remain weak, the government would rather buy from the farmers and distribute it through the public distribution system. If at all, they would be thinking on those lines. But even I agree to Rakesh, I do not see the government really entering into any import contracts for yellow peas.
Now, I was making the assumption that India will still need to import because they're not self-sufficient on pulses yet. But it just more so, I mean, there's an element of control, and the only way to control the market would be, I mean, for them to import themselves ultimately, right?
That is true. Basically, the government has announced that they are working on a long-term agri-export and import policy, which they are due to announce maybe in a couple of months or 3 months from now. This government is really working very hard, and they've changed their focus from food security to farmer income security. So they are working, and there have been a couple of announcements from the government that they are working on a sustained long-term policy with regard to agri-imports and exports. The gentleman there, please.
So I'm new to the trade, and just a very theoretical question that government is now going towards the announcement of the MSP, the minimum support price for pulses. So does it not give in advance a benchmark price for the exporters that at least their pricing system could be adjusted to that specific level? So this information, the whole policy, in a way is not bad. So you know in advance that, well, that is the minimum support price, and this minimum support price every year would be already adjusted to the inflation, etc. So progressively, I think all that is not a bad news. I'm just assuming. So I want Rakesh, if you could comment on that.
See, basically it is a government policy. What you are suggesting is very good. But again, there are trade hurdles and government cannot, regulate everything. The suggestion is very good. Yes, means you are suggesting that whatever the CNF cost is there, balance to just means the differential between the MSP and the CIF cost. You are asking the government to take it as a duty, right? Yeah, the suggestion is very good. It all depends upon the government. The suggestion is very good.
And on the export front also, as you said rightly, the minimum support price could be in a way a minimum floor price at which the government would allow exports. So if one were to think of getting into exports, the MSP would be a guiding factor for them, that they should not be selling below the MSP prices even for export contracts. This is what I feel the government thinks. But then, as I said, we are expecting a long-term policy from them very soon, as even announced by the Commerce Minister a few days ago. So we are all hopeful about that.
Yeah, my question is to Mr. Nadeem. You just mentioned that 275 is a reasonable level for the yellow peas from the Black Sea countries. And you also mentioned that this is with methyl bromide. Now, working with some of the shippers in the Black Sea, some of the shippers always say, we can never give you methyl bromide. Some of them says, okay, you want it, we give you so many dollars more, so many dollars less. Can you just give us a little...
275 is without methyl bromide.
So how much is it with methyl bromide? What is the normal difference, and why is it that some shippers always say, come what may, we cannot give you methyl bromide, and some of the shippers are flexible in giving it?
Okay, methyl bromide fumigation is forbidden in Ukraine and Russia, but there is an option to do it in Turkey via transshipment. So it will add another $8 to $9 depending on the coastal freight, depending on the container freight difference with Russia and Turkey. So it will be minimum $8 difference on the costing side. But all of the shippers know that buyers in India are paying more penalty when you compare with $8. So whatever the penalty is, it will be added to the price, I believe.
My question is to our Indian friends in the panel. If I presume that you don't have a duty on faba beans, so if faba beans and yellow peas are at the same price, would India import faba beans? And what has your experience with faba beans been in India?
See, faba beans end use is something different from yellow peas. Faba beans is used in certain parts of, I think, eastern India, and I don't know much about it, but yet again, it has a different use. And yellow peas has totally different use. Yellow peas is being used as a split peas, also split dals, and they are mixed in besan also. And faba beans is used, basically it's majorly used in a split dals also, but not much liked by the consumers. Only in certain parts of India it is liked. So that's why we cannot compare faba beans to yellow peas.
We have to go a long way before our Indian taste gets accustomed to faba beans. This is what even I've heard from the consumer side. There are some people who are using faba beans, but the use is very, very limited. So I guess there are no more questions. Everyone is happy, and I believe you all like the presentations and the views expressed. Okay, we have one more question. Yes, Parthi.
Just one more comment on the quantitative restrictions. Anything can happen in India, anything can happen, but technically speaking, quantitative restriction is not the right tool to manage or to be a trade barrier. So I highly doubt they would do, based on our interactions, they would use quantitative restrictions as a tool to control imports, particularly on LOPs. So just a comment on that one. And of course, one more comment is on the Agriculture Canada's figures in terms of planting intentions and also the carryover. It's more towards what Chad was proposing rather than what Jonathon was saying. So the carryover is expected to be much more than what you presented, Jonathon, as per Agriculture Canada, and also the planting intention is based on that. It's going to be at least 25% to 30% reduction in LOP sowing this year. Just a comment.
Thank you so much, Parthi. Thanks, everyone, and I hope you all like the views expressed by my panelists. Thanks so much for attending. Thank you.
Thank you very much. What a wonderful panel. They gave us a quite comprehensive white paper on yellow peas. Big round of applause. May I please request Convener North Zone, Mr. Pradeep Jindal, IPGA, to please step forward. We're having this event, of course, in his backyard, so to speak, to present a memento to this panel. Starting off with our moderator, Mr. Anurag Tulshan.